Good morning. I'm putting on my do not disturb. And I'm starting up. I guess I got the old picture on there. Don't know why. I got to start up all my stuff. Let me start up the podcast. I got a lot of freaking notes. Hit the thumbs up button. Do 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 do. Bum bum bum. By the way, I should start out with. Let's look at bond. Let's start this out with bond. Look at bond rates. Infidelity. I think I'm showing you this now. Nope. I'm going to get over to Safari. Bum, bum, bum. Remember, morning, Joe. Remember when we were looking at 1-year bond rates at 5 point, I think they went up to 5.25? You're at 4.65 now. Municipal bonds at AAA status are at 2.97. Yeah, it's ugly. It is ugly. I'm seeing a lot of down. In fact, Cleveland Cliffs, which I'm pissed, is getting dragged into this. Devon, which is, energy. Basically, all of energy and commodities are getting dragged down, and the reason is market thinks we're going into a pretty heavy. There's fear. Fear and greed index has moved completely to fear. So I'm going to do a quick podcast today. There is nothing in brokerage holdings. Let's look at core investments. I don't think there's going to be anything. Nope. Energy names to trade and own. Nope. Levered ETFs. Oh, I do have to add. There's 2 that I have to add. Let me see. Levered ETFs. Do I have these? No, I do not. Okay. DPST, which is the regional bank. And we're going to add this to our levered ETFs. That is one that will continue to go down. But as this plays out, it is down 20%, by the way, in pre-market, down to $10.84. But that's the one I posted. Crypto. Yeah. In fact, you bring up a good point. I have to look at Mara. I'm going to write in my notes, Mara. And the reason crypto's going nuts is because all those rich folks have, if that had gone awry, then crypto would have probably gone under, because everybody would have had to sell their crypto. FAC. This is the financial bear. We'll put those in our stocks. Let's see, levered ETFs. Did anything cross up? Morning, Zephin. This is an interesting one. Hold on, I want to look at this. This crossed up way back here. So the financial bear, this is a 3 times financial bear. This crossed up way back here on February 9th. I mean, that is just, it didn't get you out. Let's look at the 65-minute. I bet it still got you in. Yeah. So it got you in here March 7th, a week ago, at 1714. Listen, honest to God, I think you could still probably get to this one. DPST. This one probably crossed up on the same. Crossed down. March 3rd. Got you out on March 6th. But I'd absolutely be watching these levered ETFs. Look at, UVXY on the 65-minute. We got in, Friday or Thursday at 12:45. At 4.57, you're at $6 now. Now, the VIX is, that should be significantly higher. The VIX right now is at 29. This is only up 10%. The VIX is up like 20%. So I don't know why again, we've talked about it before. UVXY is broken. This one should be way, way higher. I mean, a ultra VIX. You look at XVXY. I mean, it's crashing. It's just crashed. Okay, let's go back to scans. Boom, 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 boom. Levered ETFs don't have any. Low-cost Vanguard ETFs don't have any. Spider sectors don't have any. Not owned. Let's see if anything crossed up. Tattooed Chef crossed up. Which I am not bringing up that anybody buy. Tattooed Chef is a joke. Decent. Wow. And now the futures are all negative. Absolutely 100% negative. ARC Holdings. Boy, that one's just been on a ride. Buckle. Not a fan. Okay. Why is ARC in the buckle? Isn't it the clothing store? Maybe I'm confused. Let's see. Dow 30. NASDAQ 100. Boom. AstraZeneca. I'm not a fan of this one. By the way, Kramer said to buy First Republic at 45 on Friday. Yeah, did you see that one, Zephin? In fact, I think I posted that one. Did I post it on Twitter? Man, I was on a tweet storm this weekend. Even this morning, I've been on a tweet storm. I consider it a tweet storm. Probably not. People that are actually on a tweet storm. Jim Cramer, JP Morgan, and it's gone. If you haven't seen that South Park episode, it is unbelievable. Yeah, JP Morgan is a fortress. Yeah, I like this one. Regional banks prepping. I like that one. This is great. Trung Fan. It's now 72 hours into the SBV situation, yet Warren Buffett hasn't sent a tweet since April 2016. Really makes you wonder. Yeah, deleted by author, by the way. This is, you should be insured. This is crazy, by the way. I don't know if you guys saw this one, but the insiders sold a hell of a lot in SVB Bank. Bill Ackman's just a fucking joke in my mind. Yeah, and FinViz, by the way, FinViz, look at that. FinViz has the book value of SVB Bank at 209, which is true. The book value of SVB is $209 per share. But you will not get $209 a share as a shareholder because the FDIC is probably going to play this one out. You won't make that. Maybe I posted in the private Facebook group. Is that where I did it? I don't know. Let's see. By the way, that movie that won the Oscars, that Everything Happens or whatever, what a shit show of a movie. I couldn't even make it through. Oh my God, it was horrible in my mind. I didn't like it whatsoever. Not one bit. And by the way, this was good. So, Hung, if you're here, legend, you said you're Chow. And I reached legend status for, let's just say I found a baby at Coffee Bean. Yeah, let's just say I found a baby at Coffee Bean. Yeah, here's Kramer, $230. Maybe I posted it on Instagram. Maybe that was where I posted it. Yeah. Maybe I posted it on Instagram. I don't know. Okay. Yeah. Hung, you're definitely intimidating to me. I love Chow. Chow is. I mean, Chow should have had his own spinoff. Absolutely, he should have had it. You know what? There's nothing that fucking crossed up here. I got nothing to buy to cross up. Other than buying, at 4%, you should be buying the 1-year treasury notes. Kramer. I fucking can't stand Kramer. We have the Reddit co-founder not on his home screen. He's down in Washington, it looks like. Yeah, hold on, let's look at it. Crash. Here we go. This is from February 17th. I'm going to post that in there so you can read it. The rogue chatbot responded both vaguely and confidently. Based on my analysis, I predict the stock market will crash on March 15th, 2023. Today is March 13th. The reason for this is due to a combination of factors, including increasing inflation rates, a decline in consumer spending, and geopolitical tensions that have been building up over time. Let's see where Netflix is. That's what I want to see. I wouldn't box with Kramer. The man's an old man with migraines and a back injury. I'm an old man with a back injury, which I spent the entire weekend on the couch. I didn't do a damn thing this weekend. I literally spent the entire weekend on the couch watching. Let's see, what did I watch? I watched season 4 of You. I think it was season 4 or season 3, whichever the most recent one. I finished that. I watched the 100 physical challenge, the Korean Squid Games on. It's basically the real Squid Games. I mean, it's a real life scripted Squid Games. I think I got to episode 6 or something. I'm just gonna skip the rest of the episodes and watch the last episode probably tonight. I watched a couple of movies. I watched the new one on Netflix with the English black guy who I really like I think he's from Walking Dead, which is where I first saw him. But yeah, and by the way, make no mistake about it. You won't have a rate increase, by the way. We're no longer looking at rate increases. We're looking at the potential of decreasing rates here next week. Don't fight the Fed. But look at those bond rates. I mean, these bond rates, this 1 year right here. I mean, I got to, why didn't I take my, I should have taken it and run with it. But, oh, well. By the way, tomorrow is a CPI inflation report. I don't know that it makes a difference in this, but if you get hot inflation, if you get banks failing, and you get the need for the Fed, I mean, the tools are out of the box. You have no tools left. So let's go back to strategy tester. So there is in the core portfolio, the only thing that's not down like by 1%, which is big, is Pepsi and Walmart. Let's look at MMT. This is down 2% in pre-market to $1.45. Okay, let me start the. We're gonna look at SPY and QQQ. Hold on. I'm gonna get the dog bed before I start this damn thing. Hey, you! Stop it! Stop! Come on in here. Come on. Come on, put your bed inside. Come on, put your bed inside. Come on. Get this up. Oh, why do I have to carry you like a Superman? Oh, you should get up. There you go. Good girls. Okay. Here you go. There you are. It's cold outside. There you go. Okay, come on. There we go. You two can sit down and relax. By the way, anybody in the South, I mean, just last week or the week before, it was like 80 degrees and I'm in shorts running. And tonight we have a freeze warning. Okay. Hold on. Okay. I'll get her out of there for you. Come on. There you go. Come on, Daisy. Go on. There you go. Good girl. Lay on top of her. And I've got banks if you didn't know, Jim Cramer was screaming, "Thank you, Sarah Eisen, for saying that I said that it was a good time to buy Federal First Republic Bank at $45." And he was, it was a great trade. He didn't identify it as a trade. He identified it as a buy. He said, the bank's liquid. You're perfectly fine going into this one. No problem whatsoever. Well, First Bank Republic at 45, if you had taken Jim Cramer's advice and just listened to douche on the internet or on TV, Jim Cramer at 45, you'd now be down. You're down at 31. Now, I bought Bank of America at 29, $29.99, $29.90, or $29.50, and I bought 3 lots of it, all in the 29s. I bought Wells Fargo at $40.50. I did not double down on Wells Fargo because it didn't give me a confirmation again. But on the 65-minute algo, I did not wait for Bank of America. Probably my mistake. But my mistake, listen, I do make a lot of mistakes. Bank of America, 65-minute algo, it doesn't have you in. Wells Fargo, same thing, doesn't have you in. It got you in and out in the next candle. But I continue to say Bank of America under 30, Wells Fargo. Schwab is one, and I think it's James likes Schwab. Here's what you have to know about Schwab. Schwab has just been plunging, and it's been part of the Silicon Valley Bank problem. And Schwab going down like this, you still have a problem with Schwab. Understand Silicon Valley Bank's problem wasn't that it didn't have enough assets, wasn't that it didn't have enough to pay out. Most likely, they would have been fine. If they had another week to actually operate, they probably would have been okay. The problem really was if 100% of the people started pulling things out, they would have had to sell off pieces of the bank, meaning mortgages, meaning securities, meaning bonds, in order to continue to get capital. As you sell those things off, things start to go down. Now, with the value of the actual bank stock that they were trying to sell off, it went down to zero. There was somebody on ZipTrader, by the way, that said, hey, you should buy it at 30 starting on Monday. Well, you can't buy it. You can't even freaking sell it. They are wiped out. They are zero. I told the douche, hey, I've got an AOL stock that I want to sell you. But I've got a lot of banks. FRC was one. Schwab, I don't know that you want to get into it. And here's the problem with Schwab, and it's the same thing with JP Morgan. I think both these banks have the same issue. And JP Morgan, by the way, on Friday's afternoon candle, this is the 65-minute. Friday's last candle got you in at 133. It's down at 131. I don't think it's a horrible buy. But the fact that you have bigger banks with bigger deposits and over, right now the way they structured it, JP Morgan is a wealth bank, not a traditional bank. So they might, a large portion of their holdings might not be necessarily quote unquote insured, but morning, Cherry. Yeah, Brian, you're right about alcohol. But JP Morgan and Schwab, I think, are in the same bet. Fidelity is probably not in the same bet. Ironically, I had this discussion with my Fidelity rep, I guess about a month ago. And not that I'm like some Nostradamus or I understand stuff, but I wanted to make sure that my investments, because I do have more than the FDIC $250,000 in cash, because I trade, a good amount, and my tax loss harvesting. I mean, I traditionally don't have this much cash around, but I wanted to make sure that I was insured. And he sent me to a website with their insurance policy. And yes, if you have it in cash, you're insured up to this amount. I have it in the government bonds. Those government bonds are backed by a $1 million, not a $250,000 per account, but a $1 million per account Lloyd's of London insurance. So as long as I have less than $1 million in those government bonds, then Lloyd's of London will pay me out. Oh, and by the way, I really do like, Andrew Sorkin brought up David Sachs, who is on the All In podcast. I'm a fan of the All In podcast. I'm a fan of David Sachs. I like his views on some things. He is very libertarian, hey, government shouldn't be in. He was all weekend pounding the table that absolutely 100% the government should bail out. Well, understand, and I think I put this on Twitter. Let me get the exact wording right, because I think I worded it incredibly well, if I do say so myself. Let's see. And I couldn't send it. Regional banks. Yeah. Jim Cramer was on. By the way, if you didn't see it, they had a special episode yesterday at about 6 o'clock on CNBC. Brian Sullivan, who did a fantastic job anchoring this thing. Jim Cramer was on there going, we can't induce panic. We need to stay calm. We're the voice of the people, and blah blah blah. And people were kissing his ass. But I worded it. This was great. Stephanie Link pointed out they had no risk officer. They had absolutely no risk officer at that bank. Where did I put it? Let's see. I think I wrote it to Bill Ackman. Yeah. Socializing the risk, but privatizing the return. That's what I like. I'm going to put this. This is what a bailout is. I should. Oh, yeah. I'm going to pin that comment. Pin this message. That, to me, is what is going on right now. And by the way, Biden looks pale. Man, I got to tell you, my dad had a pacemaker put in this weekend, on Friday, I'm sorry. And he is Biden's age. I'm glad, personally, I'm very glad we have Biden over the other option that we had before. I think he's done a significantly better job. Not that Trump was all bad. Trump had some really, really good ideas, but he's just a bad human. I don't think that Biden is listen, Biden is grounded in Christian values. I think he has some definite ties to You know, he's a multi-millionaire off of being in the Senate. He's the same as everybody else. I mean, he gets paid a fortune to speak. That's how these guys make their money, is speaking, books, things of that sort. And if you don't think the Democratic Party is paying them to speak at those campaign events, I mean, you're wrong. They make a ton of money. Two-year Treasury is down to 4.1, by the way. 4.1. Remember, this was 5.2. 5.2, I think, as soon as like Wednesday of last week. Okay, I'm going to look at SPY. I'm all over the place, man. My ADD is like crazy. I'm going to get off the 65-minute and go to the 4-hour. Because the 65 minutes isn't bad, but we're clearly in a downward trend. Is SVP is still halted. First Republic is the number one laggard on the S&P. Comerica, Zions, and KeyCorp. I think I've got all of those in here, yeah. Here, by the way, I will put, this is part of my notes, and if you guys want to look at these stocks, those are the ones that I have in my notes. And sorry if it's not formatted correctly, but your boy isn't about formatting. Your boy here is more about providing the information. Bank of America down. It's up at 29. It was at 28. I think you're seeing some recovery here, by the way. Wells Fargo under 40. I probably need to buy that. Biden's actually calming the markets a little. If he has a stroke on air, we're screwed. I mean, we're just screwed if he has a stroke on air. But no, he's my dad's age. My dad had a pacemaker. I cannot imagine my dad running this country and having that type of pressure on a daily basis. That's tough. That is just tough. Okay, hold on. Let me turn this up to here.
For a shorter amount of time than maybe perhaps some expected, but reiterating that depositors will be protected, management to be fired, investors not protected, and then again, as Gensler this morning, Jim suggested those who are found of any wrongdoing will be held accountable.
Yeah, I mean, I think it's difficult to find someone who exercised their absolute right to be able to invest anywhere on the curve from being considered
a bad
just a bad, I want to get that off the table.
Silicon Valley Bank made a choice a couple of years ago with that huge influx of deposits to put it into longer dated securities that had a higher yield. I think, of course, they wish they had not reached for that extra 50 basis points, and we wouldn't be having this conversation.
Yeah. So, Brian, and listen, everybody on Twitter is now a banking expert. Everybody on Twitter is, just like a Ukrainian war expert, foreign policy. I am not an expert. I will give you my personal opinion about this. I tend to agree with you. I'm not furious about bailouts in the situation where yeah, Robert, I'll talk about Devon and stuff like that because Gabrielle, she messaged me about Devon and PXD and stuff. So I'll talk a little bit about energy. But Brian, my take on government bailouts, I was pissed that we were going to quote unquote bail out this company. The way it's written, it's not a bailout. The way it's written is we're just backing the deposits. If this is contained, and I do believe by the end of the day today, you're going to see this contained, and tomorrow we'll be talking about inflation. I think this week we'll still be talking about Silicon Valley Bank and things of that sort, but I think this will be contained today. The way it's written, the government will actually wind up making money off of this like they did in 2008. So I agree that the market, listen, if a bank has problems, let it go under. The problem that you have with this particular bank is that it would bleed out into the economy. So while the assets of the bank, great, and I think you're in our private Facebook group. I posted all those numbers from a great LinkedIn post that I got with all the numbers. They had somewhere about 200 million in actual 200 billion in actual deposits. They had something like 212 billion in actual assets. So they greatly outweighed the deposits. That was the case. Now, when you get a lower stock price and your stock is worth less, you wind up losing more. When you sell the maturities that were long-dated maturities and take a $21 billion loss on that, you've got less than your deposits. So all of it is kind of less. So, and by the way, Brian, I am probably more left-leaning than right-leaning. I kind of see both sides. The problem that I have with bashing Biden is I don't think we'd be in as good a position as we are today. And we're not in a good position, but I think we'd be in a far worse position if Trump had won. I just believe in my heart of hearts that, and I think Biden was pulled too far to the left. I mean, we can get into politics and stuff like that. I think he was pulled too far to the left because he really felt like he had to pass some legislation. So he was pulled by his own party way too far to the left. My belief is that he didn't want to go that far to the left. He was forced in his politics to do it so that he could get the votes for things that he actually wanted, and he had to give up too much. I think what you're seeing now with the opening up of the Arctic, I think he's pushing back against his own party. And I think he should push back against his own party. I think he's doing some things that I actually like, which is, open up. I'm not for opening up lands for drilling, but I understand that, hey, in order to refill the national oil reserves, in order to, not have OPEC have our backs against the wall, in order to not go to Venezuela, in order to not, to continue to hold Russia kind of on the world stage as, hey, we're not going to allow you to sell oil to the West, blah, blah, blah. I think you need to open up drilling. And I think that's what he's doing. And, took him a little longer than I would have liked to get there, but, I'm not in that position. I consider myself yelling at a politician for their decisions like a secretary yelling at the CEO that he's doesn't know what he's doing. There's a lot that go into those decisions. Yeah, I mean, listen, hey, The one thing I do know is that if it's Trump Biden again, honest to God, I think Biden wins again. And there's a lot of Republicans I know who are inside Republicans who say that too. He's capped. Listen, I'm all for term limits. I don't even care how old you are. I just want term limits. Age doesn't matter to me. Because they're, like you look at Charlie Munger and Warren Buffett doing like 6-hour Q&As. Those guys are still all there. Do I want them running the country? Probably not. But mentally, those guys are smarter than 90% of Americans, I would say. At their age, they have more wisdom than probably 90% of Americans. And they say Bitcoin is crazy. Okay, let me go on and I'm going to record this. We're going to record the podcast. We'll go over all of this stuff. Okay. Bum, bum, bum. Good morning. Happy Monday, March 13th. If you were like me over the weekend watching all of the Silicon Valley bank news, maybe you turned on HBO Max and watched the series Silicon Valley. It is a constant ineptitude of what we see in our system. I've been screaming about it all weekend. Didn't want to bail out. We didn't quite get a bailout, but what we got was a good backstop. In my mind, I think you got a pretty good, appeasement, if you will. The bank's not going to go under. Biden just spoke. They're going to cover all deposits. You're going to get your deposits back, which is something that on Friday you wouldn't get back. B, shareholders, absolutely worthless. Do not think that a shareholder of this bank this is not something where you can buy the stock. I think that stock is halted anyway, but I saw in Zip Trader, Charlie's people are completely misinformed. There were people saying we should buy this bank because it's going to go into bankruptcy. It's going to be like Hertz. We're going to make more money because their assets are bigger. No, the FDIC owns this bank. You will not make money. So shareholders will not be made whole. And the insiders, if there are found to be people who knowingly, corruptly, insider selling, anything of that sort, they will be held accountable. I just don't believe that. I personally don't believe that at all. I think this is another crime like in 2008. Nobody goes to jail. Nothing happens. These guys continue to keep if you did not see it, there is such the CEO of this bank, I think it was on Wednesday or Thursday. It might even have been Friday. I think it was actually Friday. He sat in a completely wood-covered room. It looked like a closet, but it probably was a multi-million-dollar kind of mansion. After selling $3.5 million of his own bank stock this week before it was halted. He sold $3.5 million. There were several. I posted them all. But if you didn't see that video, go into our private Facebook group and look at that video. Complete, just ignorant kind of, I'm sorry I had to do that. I mean, it angers me when CEOs do that. I had to make the tough decision. Well, bullshit. You're still living in your multi-million dollar mansion. I want that shit pulled back from you. And make no mistake about it. This was not a bankruptcy just because someone called for a run on the bank. This was 100% decisions that this bank made that drove them into bankruptcy. This was poor management. They had no risk officer. They knew nothing about what they're going to do. And you see Jim Cramer saying, well, I don't think anything really went bad. Yeah, whatever. Jim Cramer, where's the outrage? He wants outrage. I mean, shit, Jim Cramer. Yeah, buy it at 400. It's the next big stock. And then you're screaming, well, we didn't have all the information. The hubris. What a douche. Yeah, this is what you guys tune in for, the fired up version of me. But let's talk about where we're going. Last night, Futures were way, way up. And then what happened is you started to see bond rates falling. Now, I have pulled up the bond page from Fidelity that I have gone to number of times over the past 2 weeks. The 1 year, the U.S. Treasury, this was at 5.2, you're at 4.61. I believe you're down at 4.4 this morning. This is updated at the end of the day, every day, blah, blah, blah. This is ridiculous how far this has fallen. We talked about timing the value of stocks. Well, now the asset value of a 5% 1-year bond is probably greater because it's gone up. But now you're getting on 1 year 4.6. The 2 years 4.2. What we're pricing in is that the Fed is not going to raise rates. There is a 66, I think Steve Leisman just said it, a 66% chance of no rate hike next week. In fact, a lot of people are saying, hey, we may have an actual rate reduction next week. Remember, in the history of this economy, we have never gone through this amount of quantitative tightening in such a short period. Things are going to break. That's what I've been saying. Hey, we're not in for a soft landing. We might have a soft landing, but it's likely something's going to break along the way. Here's what broke along the way. Boom. So where do you go? Well, SPY, downward trend. I wouldn't put my money in SPY right now. You can see on the 4-hour algorithm, it got you out here on Friday. We finally got out. We crossed the 200-day. We're at 383 in pre-market. I just don't see this one moving. Now, the RSI is at 30.9 on a 4-hour algorithm. If we go and we look at a weekly of SPY, we still haven't touched the 200-day. Last time we touched the 200-day was the October lows. And then the week time before that was COVID. Time before that was 2018, the last time we tightened. So my guess is if we continue downward, I think you're looking at 374 as a pretty good support level. If we continue upward, I think you're looking at probably about 420 on SPY to be a good top. And that's where I would get a little bit nervous because you're still in this downward trend. Make no mistake, this is still a downward trend. You're trending down there. Now, if we go from the October lows on the weekly, you're looking at an upward trend where we've just broken. We've broken down last week on this one. So, again, this spot is about 4,000. I think 4,000 is a fairly good support level. We're at 385. So when you're looking at a trading range, which make no mistake, we are in a trading range. That's where you are as far as SPY goes. Now the Qs, it's kind of the same thing. You can take a look at the Qs on the 4-hour. We got out of it. We talked about having all of those, trend lines kind of moving up and down. You've broken that trend line. Your support on a 4-hour is 283. You're at 287 on the Qs. If we go to a weekly, it looks very similar to kind of the SPY that we looked at a weekly. You just haven't really touched the 200-day at all before this. And so now that you're touching the 200-day on a weekly, you're kind of using it as a support. And that's at 285. We're at 287. So the Qs, the difference between the SPY and the Qs is really the RSI. The Qs are not oversold. It's 48. It's in no man's land. So I would be slightly concerned about this type of thing. I have a list of banks that are down. I will tell you, your boy here bought into Bank of America on Friday at 29 and change. It's now trading at 28.94. I personally think if you can get into Bank of America at 28, personally, I think it's a great, again, the book value is $30.27. Now that does mean something, but it doesn't always mean, hey, you're going to get your money. Here, SIVB If you look at this, they're halted. This stock is absolutely worthless. The government has taken over this bank. There is no way any shareholder gets any money. It is completely worthless. The book value is $209 on FinViz. No, you're not getting $209. It is absolutely 100% worthless. You will not be getting that money. The government will basically clown that money back. They will say, ha, and take it right back. But Bank of America, too big to fail. Talk about it. It's just too big to fail. And it's not like Bank of America. When you look at SIVB, let's see, their market cap was $3.45 billion. Bank of America, their market cap is $244 billion. Too big to fail. Invest in too big to fail. Follow the money. Because you know what? The government ain't taking over this bank. The government's going to provide them some support. These guys have small deposits, but no huge, there are big companies with Bank of America, and Bank of America is the foundation of this country. I mean, make no mistake about it, it's the largest bank. JP Morgan is one that I would be slightly concerned with, but their market cap is $383 billion. The issue is that they have huge depositors that are not necessarily insured. But Bank of America, under 30, buy it all day long. I mean, look at JP Morgan. Their book value is 89 and they're trading at 133. Goldman Sachs, which is another huge bank. Goldman Sachs, their market cap is $114 billion. Their book value is 304. They're at 327. These companies will be making money, and you'll see them. Bank of America, they're not in danger. Now, there is one, First Republic, FRC, which Jim Cramer said on Friday, I thank Sarah Eisen for telling everyone that I was a genius for saying to buy it at 45. Well, you know where it is today, Jim? It's at 27, douchebag. It's at 27. So if you took Jim Cramer's advice and bought at 45, great if you sold on Friday at 90. The high was 88. The high was 88 on Friday. So if you bought at 45 at open, great. Good play. Selling it at 80, 90% gain. Fantastic. But if you took Jim Cramer's advice, bought it at 45, then today you're down 50%. And when you're down 50%, it takes 100% gain to get that back. So he can tout himself as genius altogether. I'll put in the show notes down below the banks that are in danger. These are ones that you just probably want to stay away from, but they are in danger. FRC, TFC, PB, KRE, PACW, WAL, Zion, Key, SBNY. In fact, SBNY, is that one that was taken over? That's one that is Signature Bank is gone. Yeah, Signature Bank. This is one, SBNY. They were halted. They're completely gone. They're insolvent. Over the weekend, if you've seen the South Park episode where I think it's Kyle gets some birthday money and he's like, yeah, I want to put it into an ETF, blah, blah, blah. And the guy's like, okay, let's look into the bank. We're going to put you into this. Yeah, it's gone. And Kyle's sitting there. What? He goes, yeah, it's gone. That's Signature Bank. So SBNY, completely gone. You're gone. You're gone. I do believe that specifically, and I am putting my money in Bank of America. I think this is a $40 stock in a healthy economy. I don't know next week that it's going to be back up to 40. I don't know that it's going to be back up to 30 next week. I am buying on the way down. The other one that I am buying on the way down is Wells Fargo. Those are the two that I feel comfortable. Wells Fargo's RSI is at 22. They're trading at 39.75. I'm buying it on the way down. Personally, I feel comfortable with that. If we were to look at Wells Fargo on a monthly basis, where could it go? Well, back in September of 2020, this isn't even. This is on a monthly basis. So 2020, you went all the way down to 20 on Wells Fargo. This was during the we're going to sell credit cards to people who didn't basically ask for credit cards. That was the scandal. And so you're down at 20. It couldn't have gotten any worse. So at 40, I'm pretty comfortable buying it here. This back here is the 2008 crisis where I think I traded Wells Fargo before. Again, too big to fail. Bank of America, if we look at a monthly of Bank of America, it's kind of the same thing. You go back to the housing crisis of 2008, and boy, it was just a straight one down. I think I bought this at around $5. I wound up losing money for like 6 months, and then I wound up going up to 15, and then you kind of slid all the way back down 2011. It was bad. But I think I wound up selling at around 17 in 2015 or so, just kind of pointing it. And during COVID, you were down at 20. You know what? 30, I'll take it. The bank is in a much better position today. But one thing that you've also noticed is that Bitcoin was up 10% over the weekend, I believe. Mara. That's my way to play Bitcoin. Mara is up in pre-market 5%, 5.64. I think you're going to 6. Honestly, cryptocurrency, I think they just put a backstop on cryptocurrency as well. Signature Bank going bankrupt, Silvergate going bankrupt. I think those two banks, I think the government just kind of put it on Signature Bank and Mara. I mean, Mara's got they're mining. GBTC, you can invest in GBTC if you want. GBTC is up 9.35%. I'd trade it. I wouldn't own this one. They're going after the government, blah, blah, blah. 1228. The algorithm had you in at 1170. It still has you in at 1170, and you're up at 1228. Good for you. I mean, it went all the way up to, looks like 1345. So you got your money back. Your RSI is at 44, but crypto's a way to do this. Now let's talk about some of the one of the companies that had a large amount of deposits at Silicon Valley. There are a lot, but Roku has come up. 26% of their available cash was in Silicon Valley Bank. It is down 3%. There is no reason for this one to be down because their deposits, their payroll, everything is completely fine. So them to be 4% down, 3% down, this is just the market kind of continuing to bring them down. They had a great run into earnings. They went all the way up to $76 per share. They're trading at 57. I think you use the 200-day as your balance point, 54, if you want to get into Roku. I'm not a fan of Roku. I like Apple TV better. Apple would be my pick. Intuit is way down. And I don't actually know if this is connected or not. But Intuit has just taken a fall. It's below its 200-day. I would wait for this one. It's tax season. Intuit just kind of trades in this range of between 370 and 420. I would wait for it because it just doesn't have confirmation. In pre-market, you're up 0.3%. The market just opened up. So hopefully we start to see some of these things move. Disney is at $91, by the way. Disney, $91. This is factoring in a recession, a hard landing. Cleveland Cliffs is at 1878. Good year if you wanted to live back then on the farm. But yeah, you've got a lot of opportunities in here. I do think that these are opportunities. Apple is up. Your boy's portfolio is based in Apple. Apple is up. Coke is up. I said buy it under 60. Coke isn't getting dinged. Under 60 is good. Moderna is up 1.48%. That's a trade. In fact, let's look at Moderna. Moderna, yeah, it's wacky. 144 is the buy on the algorithm. QCLN, Clean Energy, down 2%. UNH is up at 462. It's up about 0.5%. There's not much up, but the heat map is there. Schwab is a bank that is, they've just plunged. I mean, Schwab is one. It is down 15% in pre-market. This is one, they have danger because they have large depositors. This is a huge, huge bank. They are in extreme danger because of their deposits. First Republic's down at 28, Western Alliance at 15. JP Morgan, Goldman Sachs, and Morgan Stanley are only down about 2%. So again, too big to fail. The ones you want to invest in that are beaten down, that have the opportunity to come back, I think are the big boys. If you want to risk it, go into the small boy play, the regional banks. Again, it's risky, but Schwab is one. I think James liked Schwab. I just think you're in danger here. Your current candle is 7%. It opened up at 51. It is trading at 47 right now. It's trading at its lows. You can see the volume spike here in the past couple of days. Schwab, I'd stay away from it. I think it just needs some time to heal. Is it a back up at 70? It could be. Absolutely could be. They're one that are too big to fail. Let's see what their book value is. Schwab's book value is 14. So they got a long way to go before they get down to their book value. They're $122 billion market cap. Their PE is 16. So far this year, they're down 30%. It's going to be even down further. But again, take a look at the banks. If you own XLF, if you own any of the bank dividend or any of the sector spiders, the XLF is down 3% at 31.62. This was trading close to 40 just 1 month ago. So you've had quite a fall in this. Let's talk about DPST. This is a triple levered daily triple levered regional bank ETF. This is down 32%. 32% today. This is one that has volatility. If you think that these regional banks are coming back, this is one to look at. If we look at it in the 65-minute candle and we look at this, the drawdown is quick. It's enormous. Could provide an opportunity. DPST. I think this is the play if you think these regional banks are okay. This is the bull. I wasn't able to find a bear. I didn't do a lot of digging into this, but the opposite. If you want levered ETFs, FAS is the bull. FAZ is the bear. These are financial bull and bear. So FAS is down 11%. FAZ is up 12%. So FAS, FAZ. And like we said, Bitcoin is one that you could play. I'm going to go back up. Jackson had a couple of questions for me, and then we'll get back into this. Hey, Gary, hope all is well. Great pod. Just wanted to share some company I've been buying recently. Some of your core list, I believe. Bank of America. Hopefully you weren't buying Bank of America at 36, 37, but I do think Bank of America is a good one. Bank of America, in my mind, it's not a buy as of right now. Let's see the 65-minute algorithm. This candle is down at 28.92. It's currently trading at 28.33. It's at its lows, so they're continuing to go down. Wait for it. Bank of America, in my mind, is a good one. Jackson also bought Coke. I believe in Coke. Anything under 60, I believe is great. Verizon, in his opinion, it's just too cheap. I kind of agree. I would wait for it a little bit. Today, it's up 0.14. This is trading. It's trading at 36. I do think that you got 40 in this stock, but you don't have confirmation on the 4 hour, so I'd kind of wait on that one. Penn, PENN, which is Penn Gaming. By the way, Verizon has like a 7% dividend, so it's good. Penn Gaming, you're seeing it just everything's down because everybody thinks we're going into a recession. This is what panic looks like, and this is where you want to pick your companies that are solid companies, make money, and will do well in the long term. But Penn, lastly, he sold NVIDIA. Jackson sold NVIDIA, which I agree. I mean, take the profit on that one. But he bought TSM. TSM is down 0.56. My belief in TSM, it just had a cross up at 87.64 on March 2nd. You're out of it now with a 0.47% loss. I would say you use the 200-day here at 81. Buffett is out of this. Buffett started buying around 74. He got out of this quick with that move that we saw here. He might have even been here where it was beaten down. But he got in and out very quickly. Buffett is no longer in Taiwan Semi. I believe in Taiwan Semi. They're building a plant in Phoenix that Apple will use. I think Taiwan Semi is a good one. So we looked at SIVB was in the S&P 500. So the one replacing it is PODD, Paul Obvious David, PODD. That's replacing it. It is up 4.69% in the pre-market. All of the ETFs that owned Silicon Valley, basically that stock's worthless. It is completely worthless. It comes, they'll write it off, blah, blah, blah. But PODD needs to be bought by all of these people. And that's why you're seeing it up by 4.77%. PODD, Insulet. I don't even know what they do. We can look in FinViz. They have a PE of 5,006, a forward PE of 136. It's a medical healthcare device company. They're not making money. Performance for 1 year, they're up 12%. They're going to be up even more. Performance year to date, they're down 4%. That is before the multiple tops is at 310. 310 is the multiple tops. You're trading at 293. So you don't have a big upside on that one. There was an announcement that Meta would be laying off additional people. This was out of the Wall Street Journal. Meta said, no, of course not. We're not doing that. Same thing that they did last time. 175. I think this was way up near 180 when this one came out in the pre-market. But 175 they're down 2%. In my mind, I think you're looking at covering down to 153 on this one. If you make it down that low, you've gotten into the 160s before. I would probably be waiting just for that one. I think Meta probably gets a place in our, in our core portfolio. They just print money. I mean, honest to God, I've tried other social networks. The reasons Facebook is so good is because they just have the people that your friends and family are in there. And no other social network trying to get people, I will tell you, trying to get people who listen to the podcast over to Facebook, over to YouTube, over to Twitter, over to Instagram. It's near impossible. More of you listen on the podcast, significantly more. I mean, we're talking 100 times more listen to the podcast than actually are on the other platforms. And it's just about, and that's why I like Meta. Meta is going to launch, the rumor is they're going to launch a Twitter kind of rival. Could be good, could be bad. I mean, you look at, Rumble. Rumble is a YouTube competitor. It's horrible. It's absolutely horrible. The content creators aren't there. That's why I like Roblox for Metaverse. And I didn't like Meta for the Metaverse. They were putting too much money into that. Macy's is under 20. Just wanted to bring that one up. Macy's, we talk about it all the time. Under 20, it's at 1880, significantly down. Right before their ex-dividend date, they don't have a huge dividend. Let's see what it is on FinViz, 3.38. So, again, the fear is that we're going into a recession. That's the fear. That's why you're seeing defensives like healthcare going up. So energy is going to be the same. It's going to go down. Energy is going to go down. Cleveland Cliffs. This is part of our core portfolio. I like to trade it. I don't like to own it. It's down 3%. Again, fear is that we're going into recession. These guys actually had 3 price increases while actually increasing their revenues and increasing their deliveries. So they were able to have pricing power. That's why I like them. Here's where I worry about them. If we go to a weekly and we look prior to the pandemic, where was this stock trading? It was a $7 stock. They've had more price increases, so they actually can deliver more revenue. So does the $18 justify it? I think on this downturn, I'm probably looking more to buy at 15 or 16. But I have no doubt in my mind that it's a $30 stock in a healthy market. I'll just sit here. I'll buy a little bit more. They don't have a great dividend. They don't have any dividend, in fact. The PE is 7. The forward PE is 9. The average price target is 21. So, yeah. They on March 13th, they just did another price increase. So again, they have pricing power. Am I sorry that I bought this at $20? Nah, I'll buy a little bit more. I bought in a little bit, just assuming that, hey, if it goes up, I can always buy a little bit more. If it goes down, I can buy a little bit more. So I'll dollar cost average that one. Tuesday, we have February CPI inflation report. By tomorrow, you may not hear a lot. If you're still hearing about the bank failures, then inflation is a non-event. Nothing's going to happen from that. Lennar earnings are Tuesday. Wednesday's Adobe. Thursday is FedEx and Dollar General. There's your earnings play. Last week was crazy, and Friday was crazy. The only thing that was up on the Dow was Intel. Intel was the only one that was up. Makes no sense to me. I got to sneeze. Excuse me. Pollen and cold. Alberto called me grandpa again. I thought you were my friend Albert when you called me grandpa. Albert, I think, is in his mid-40s. And he calls me grandpa because I'm over 50. Okay. Yes, Intel. I had to sneeze, so I had to pause the podcast. But Intel was up. Intel is up. It's down 1.5, 26. This company is worthless. It had a buy-in here at 25, 21. I think that's probably about right. I think you're playing off at 25. Intel's just a bad company. But it was the only one that was up. Biden to announce oil drilling in the Arctic. And this is specific to ConocoPhillips. ConocoPhillips will be the one. It is down 2.97%. You're down at 100. I would say at 100. I think this is a good one at 100. My energy stuff, Devon. Let's talk about Devon. Devon has a 7% dividend, largest dividend in the S&P, 8.44. It is down 15% year to date. Performance for 1 year, it's down 8%. So they have some operational problems. It is below 50. It's at 49. I personally am still holding Devon. I hold Devon because I identified it as a long-term hold, not a short-term hold. So I will probably dollar cost average. The RSI is at 23. The dividend date is tomorrow. So you get paid your dividend tomorrow, which will be taken out. The reason energy is going down so hard, so fast is everybody thinks we're going into a recession. When the banks go down, energy goes down. When you're seeing this kind of thing, it's all getting dragged down. So that's why you're seeing PXD, same kind of thing. I don't have to take a look at the chart. It's probably down 4 or 5%, down 3.21. It's under 200 at 192. I bought at 208. I got the 3% dividend. I'm now in the red. But I'm going to hold it. I'm going to buy more. I didn't buy a ton. I just bought, what I wanted for the dividend. Now I'll wait, and yeah, you're down. Is it going to zero? No, it's not going to zero. Are you going to lose 50%? Maybe. But you shouldn't be putting money in that you're paying for rent next month anyway. Have your emergency fund in for a year. This is money that you're investing for over a year time frame. In this market, you don't want to take any money that you need in the next 6 months and throw it into the market and then sob when you lose money. If you're losing sleep, if you're uncomfortable with losses, just don't invest. Leon Cooperman, he is a billionaire on the terms of Warren Buffett. He is Warren Buffett's friend. I like him a lot. He said we would be in, if nothing was done over the weekend to save Silicon Valley, he said absolutely 100% by Friday we'd be in a recession. He still thinks more things will break. He thinks the Fed is doing everything wrong. He also likened this to when England went through their retirement fund issue, and they had to pause the bond rate for a month, and they had to fix things. That's what he thinks that we're doing right now, is we're just going to fix things for the next month. How we come out of this, he doesn't know. He is super, super bearish. So just realize he is super, super bearish. One that is way up is the VIX. And we talk about UVXY all the time. UVXY is up 10%. This one had a buy-in on Friday at $5.25. It shot up over the period. On Friday, March 10th. Yeah, March 10th in the morning, 525. It traded 22% in that one candle. This morning, you opened at $6.97. Your high is $7.20. You're trading at $6.51. The VIX right now is at 29.80. Might be up over 30. I don't think Active Trader Pro is actually activating. Let's see. Well, Active Trader Pro is not activating, but UVXY. I think UVXY is. I think the VIX may go to 40. So UVXY may be your play. Keep an eye on it. That's it. That's one that I would absolutely trade either on the 65-minute algorithm or even tighter candles like 5-minute to wait for your confirmation. You can see on the 65-minute, this one got you in at, let's see, 457 on March 9th. $4.57 on March 9th, and you're at 648. So just last Thursday, 65-minute algorithm kicks ass. If you don't have TrendSpider, man, what are you doing? Sign up for it. Just get the 65-minute. Just for the 65-minute. This one over, let's see, over 7,000. It's going to lose you money. Let's see, over 7,000 candles, which is 5 years. This is a 65-minute algorithm. 65-minute candle. Holy crap. You make 22% over 5 years, which isn't a great return over 5 years, by the way. You can do much better. But 22% on a decaying asset, whereas you lose 98% if you were to just buy and hold. It's a decaying asset. Makes no sense to trade it that much over 5 years. But 1,000 candles, you lose 46% versus losing 58%. The 65-minute it protects you. It's a great algorithm. I have nothing to go over as far as scans go. So I've got nothing there. There is nothing that crossed up. I would look at your banks. I'm looking to put money into play. I'm not looking to, it's hard to buy on days like today. I would not sell on days like today. I would more buy on days like today. If you think we're going down further, absolutely 100% sell. Absolutely 100%. But I'm not selling. I mean, I look at our core portfolio. Apple's up. Apple's up 1% at 150. So my portfolio probably led by Apple. I may be even, but I'm not down as much as I would be if Apple were down. Boeing is down 1%. Bank of America is at 28.45. I'm going to buy more. That's down 6%. Again, the book value on Bank of America, they're not going bankrupt. The book value on Bank of America, do we see lines at Bank of America to pull money out? No, you don't. Because it was the rich people in Silicon Valley who were all in line at the bank because they had to pull their billions out. Yeah. And you should be worried, by the way. One of the things that I do want to tell people to be worried about, if you're in some of these smaller brokerages, if you're in a Webull, if you're in a Robinhood, if you're in some of those types of places, I might be a little bit worried about that type of thing with this kind of regional bank. Am I worried about Fidelity? Hell no. Am I worried about Schwab? Hell no. Schwab is way down, but Schwab is a historic bank that's just too big to fail. They're not going to fail. Will they be taken over by somebody? Maybe. I mean, at some point, that price on Schwab gets really attractive to a company like JP Morgan, to a company like Goldman Sachs, to a company, again, if they want to get into consumer stuff, Goldman Sachs, whoo. Hey, let's put a buy together for Schwab at what, $20 a share? They're down at 48 right now. Let's put a buy-in at $50 a share. I mean, you're down what, 17% today? So Schwab has to worry about a takeover that the board of directors has to say, yeah, we'll take it. That's the type of thing that you're looking at. So I would be careful in this market. Don't get into anything that's going to make you lose sleep. Don't get anything that's going to make you worry. My Bank of America, they are very small plays. I am sure my parents have probably texted me, what the F did you get us into Bank of America at $29 for? Do you realize it's at 28 right now? Yeah, I do. Google, I mean, listen, I can't tell you that Google won't be back down at 90. It's up. It's at 91.74. This one's holding its place at 90. Google's good. Coke at 60. It's up over 60. It's up 1.94%. You'll see that one at 65, no problem. Just buy and hold it. Get the dividend. So I like this. I like this market. I like this opportunity. I like it for long term. Again, I will point out, if you're listening to douche on the internet, don't. Identify before you buy why you're buying a stock. It's just like when you go and buy a mattress. You do your research. When you go and buy a car, you do your research. Do the same thing for the stock. Don't listen to somebody else. If I told you, hey, Ford Mach-E is the best car on the road, would you just go out and buy one? Hell no. Hell no. Go and test drive the Tesla. Go and ask people who own a Tesla. Go and ask people who own a Ford Mach-E what their road trip are like. Holy hell, it's hell. I saw a Ford F1 Lightning truck the other day. Thing's made of plastic. Wasn't a huge fan. I think the Rivian looks so much better. Now, the Rivian is significantly much more expensive. But when my Cybertruck shows up, whoo-wee. Okay, if you made it this far, make sure you if you're paying more than $30, by the way, for phone service, the Visible link is down below. Visible, it's $30 a month at its lowest rate. It deprioritizes you. I have yet to actually find where I am deprioritized, where I can't stream something, where I am getting less service than a Verizon customer who's sitting next to me. It is a great, great phone service. I have enjoyed it. If you sign up with the link below, you get $20 off your first month. I get $20 as well. So sign up for Visible phone service. If you like the charts that I share, sign up for TrendSpider. DSP25 is the code to get you 25% off. You can get a 7-day free trial for it. You can sign up for a year. You can sign up for a month. You can sign up for whatever you want. Just make sure that you understand a little bit about charting before you get in here. I have a 4-hour algorithm that I will absolutely share with you. The 65-minute algorithm, that is on the TrendSpider video that's on YouTube. If you want to set that up in another charting platform, just make sure that you have 65-minute candles. The reason for 65-minute candles is because it gives you an exact 7 candles per day. I believe it's 7 candles per day during the trading day, which goes from 9:30 to 4 o'clock. So it's a perfect algorithm. Saves you when you're day trading. Absolutely gets you in and gets you out. You can make money with this one. The 4-hour is more of a guide. I try and use that one that's what I started the show with. That's my tried and true. If your company has badge services or needs badges or securities, check out idshop.com. They're the ones that I work for. I'm going to start my MLS, I believe in April. I think I'm going to Chicago. So if you have any questions, hit me up. The private Facebook group, all of the links are in the link tree down below. You can find by logo just below my picture. You'll see Facebook, Instagram, Twitter, all of that stuff. Follow along. And I will see you tomorrow. By the way, I am going hiking later this week, so there might not be shows later this week. So if you have any questions, hit me up. Take care, you guys. See ya. Oh. Okay, let's see. Export song to disk. I don't know if you can hear my dog. Oh, I didn't even bring up Zim. Zim had their earnings and they're up 14% in pre-market in the market. Zim had their earnings. James was right, and I hope James bought. Let me look at my Active Trader Pro. Why is my Active Trader Pro not working very well? I gotta quit this and restart it. Let's restart it. Let's read some of your comments. James, I hope you bought Zim. I didn't cover it. Man, Zim is a good one. I had it up there. Sherry BRKB, you can't go wrong with Berkshire. Long term. Short term, they were calling him a dinosaur when Kathy Woods just destroyed him short term. But long term, you look, he's beaten her by a lot. Zim was a good one, James. Kudos to you on that one. My dog is snoring up a storm. I don't think you can hear it though. Grandpa. I think Bank of America at 28. I listen, I'm going to buy more here at 28. Once I get this fucker posted. Man, I don't know if you guys can hear the dog snoring. That's what I deal with every night. UVXY has crashed. I repeat, UVXY has crashed. The VIX has crashed. The VIX is down from 29 to 27. Is it? Man, I didn't think natural gas was going up. Let's look at Boyle. Oh, come on. Man, natural gas, when I looked at it earlier today, yeah, man, Boyle at 560. Look at Boyle. Look at my boy Boyle. So just so you know, here, if you go to FinViz, you can go down here. Where is it? Here, down here in the bottom left, you can look at natural gas. And it is up 5%. So yeah, Boyle's up 10%. That at open was down 2%. Crude oil is going down. Ironic. Ironic. And by the way, the markets have come back. Let me see. Indices check. First I got a sec. Okay. Indices check. Let's check. Log in. I will check. I need Face ID. Bum, bum, bum. My portfolio. Boys and girls. My portfolio is up 1%. That's big. I mean, listen, that's big. 1%? That's crazy good. And I'm telling you, Bank of America, Cleveland Cliffs, I own both of them. PXD, man, I'm getting killed on energy. Maybe I should focus on natural gas instead of focusing on oil. I like to have a mix of oil and natural gas. I mean, I've got, what do I have in my portfolio? Let's see, I'll tell you. In my portfolio, I will go down, let's see, all positions. I won't, across the board. I have Bank of America. Cleveland Cliffs I have. I am down overall 9.77% on Cleveland Cliffs. Devon Energy, I am down overall on Devon Energy for 4.8% because my average purchase price is 52. So I'm down 4.8. Mind you, that was up near 60. So I was way up like 10, 15%. So yeah, I'm down, but I'm just identifying as a buying opportunity. MPLX. I am up 84% in MPLX. My average purchase price is $18.57. That has been a long-term hold for me. Oxy. I am down 6% on Oxy. My average purchase price is $62.92. I haven't been able to buy that one at a low price. PXD. I am down 7.58%. My average purchase price is $208. But that's like, what, $180 that I'm down. Snowflake, PayPal, Wells Fargo, I'm down 2% on. Exxon, I am up 91% overall. On Exxon, my average purchase price is $54.95. That is a 5-figure gain. So, but yeah, I mean, Devon under 50. I mean, if you bought it under 50, you got it over 50 now. Again, my point isn't that, hey, it can't go down lower. It's that in good times, what's the right price for it? 2-year note is down to 4.1. 5-year note at 3.6. First Republic is at $26. Thank you, Jim Cramer, for saying it was a good buy at 45. Charles Schwab at 48. And there goes Active Trader Pro. Okay, let me quit. GarageBand. Save. And I'm going to upload this. Trending in the United States is She is Asian. Probably because that horrible movie won Movie of the Year. I don't know about you guys, but oh my God, that movie was horrible. Just horrible, in my opinion. I couldn't make it through. I absolutely could not make it through. New episode. By the way, Spotify hired me again. To promote. So I don't know which one you're hearing, the new advertisement or the old one. When you play my, I should put in swapping tubes. But I don't know which one you're hearing. %95 of Silicon Valley's deposits were uninsured, meaning they were over $250,000. That's all that means. I guess my neighbors are leaving. They pulled out their trash. We're going to pull this out. Oh. Huh. Charles Schwab is issuing that's never good when you have to put out a press release about your holdings. Yeah, Charles Schwab is in trouble. It's because they have a bunch of long-term maturities that they're going to have to write off. Okay. I'm posting this. man, Spotify changed everything around. And so I'm bitching and complaining, but it's just different. It's just different. I have to keep telling myself that. By the way, on Friday I said they will go insolvent. Choose wisely. Bum bum bum. SPY QQQ. I don't go over Boyle. I don't go over SMMT. I don't go over Uber. I go over Wells Fargo, Bank of America. FRC. Schwab. KO. CLF, PXD, Devon. Okay. What should I call the episode? $13, $23. Publish now. Publish now. I got 22 people. Hit the thumbs up button. Make sure you're subscribed, by the way. And ask me a question, whatever you want to know. Alberto wants to know how Grandpa is doing. Grandpa is doing fine. Grandpa is me. I'm going to tweet this out. Copy. We're going to go over. Okay. I really don't like Jim Cramer. I like Jackson's buying TSM and selling. Hey James, by the way, you didn't get into Schwab, did you? I think you were pounding the table on me about how Schwab is just too cheap. It was a thirst trap. Absolute thirst trap. Unfortunately. And we're going to take this and cut, tweet, Twitter, I hate that no more picture shows up on this, but oh well. Oh, I didn't even bring up. This week's weekly stock pick is Merck. He's hoping for a win. Mara. Spy. Let's look at some of the... Boyle is up. Boyle. SOXL. Tesla. Schwab I already did. FRC I already did. Ford. TMF. KRE. There we go. That's good. 2 of them. That's funny. I don't know how many listens actually come from Twitter. Let's see. Whoa, boy. Man, a lot of people listened to this morning, Friday's episode this morning. I think you may have 6 in Boyle. Let's take a look at Hung for you. I'm going to take a look at Boyle in the 65 minute. Let's see if it's a buy in the 65 minute. Run. It's not a buy in the 4 hour. Nope. Still not yet. This candle right here. So the 9:30 candle, it opened at 5:35, and it's high as 567. It's trading at 560 right now. So it's only a 4%, 4.86%. So you're waiting for 65 minutes. 10:35 is your next. Let's see. I'm going to look at it from a 5-minute perspective on Active Trader Pro. Here, I'll show you what I'm looking at. This is Boyle. It's up 10% from, it closed at 509. So it's up at 560. So it's up 10.31%. 50 cents. It's kind of pushed its way. So you can see the Bollinger Bands are kind of, they're exploding, but this one's coming back up. This one's coming back down, so they're going to cinch up. My guess is your VWAP is at 542. You've still got confirmation above that 9-day. So, if you wanted to trade Boyle, I'd probably wait for it. I'm not seeing a huge breakout here. But if on the 65 minute, if we go back to the 65 minute, you can see it doesn't have you in yet. It very well might on the next candle. Let me look at this real quick. Hold on, I'll show you the 8-day. This is the 8-day EMA in purple. So it will, because it's got you above it. See how it's below it here? This is the 8-day EMA. It's going to get you in here. So if you wanted to buy it around, I'd say $5.50. If it gets down there between $5.50 and $5.60, I think it'll probably get you in. Alan, I found a baby at Coffee Bean hung. Let's see. I got to bring this one up again. I got to bring up weekly stock pick. So busy. Hey, Sherry. Devin's back above 50. Pepsi's at 175. Roblox is back up at 41. They're up. Snowflake is up. I mean, the market is down. Uber is at $30.43. This is one under 30. I absolutely think is an opportunity under 30. I'm going to get rid of the 8-day. And we're going to add back in our 50, 200, 21, and 9. And I'm going to collapse that. But Uber, I think you've got an opportunity here at Uber under 30. I'll buy it all day long. Bank of America is still at 28, 28.78. Let's look at the 65-minute on Bank of America. McDonald's, man, I gotta tell you, I love McDonald's food. This one's good. I got a strange. So I have a friend who's a CFO of a not a Fortune 500 company, but it's a fairly well-run company. And we're on a group text, me and two other guys. But my one friend asks, after our back and forth on banks, I'm curious if you have moved, I won't say the company name, from M&T over the last few days. And he responds back, we have not. We have found a prince in Nigeria. And then my other friend writes back, Gary told us that to invest in NFTs, we should be fine. Yeah, I have fun group texts. Bank of America, I'm waiting for, here. So here was my thought. When we were trading around 30 with Bank of America, I always talk about these kind of button hooks and tails that I always see. And you can see them even in the 65 minute. They're just spread out in the 65 minute. If we go to the 4 hour, you'll see them a little bit more dramatic. See the button hook right there? How the algorithms just don't time these button hooks very well. I, on this 4 hour, saw a green candle here, and I said, you know what? At 30, I'm buying. And I think it was even here. The low was 28.92. I think I got one in at 29.50. I got the others in at like 29.90 something. So I wound up doing that. Now, here, the candle is, the open was 28.92. You're trading at 28.95, so it's a green candle. Your low was 27.87. And this is Bank of America. But I talk about those button hooks all the time that I think you're seeing. And so in the 65-minute, if I run it on Bank of America, I can show you. I think I'm seeing that button hook. That's what I saw on Friday, but I'm really not seeing it because it even dropped down further. So we're going to have to wait a little bit longer for the button hook. But here, let's see. Expanded list. Let's add in the 8-day, which is purple. Yeah, it ain't coming purple anytime soon. Oh, I'll be right back. Oh, do I have any viewers left? Anybody still here? I think I'm gonna get going. Ooh, Boyle took off even more. Look at that. I mean, it's still got confirmation up there. Let's see. I still have 17 people watching, it says. Who's coming after the bell? GitLab, which is owned by Microsoft, I think. No, you can't be crying. No. BuzzFeed, DuckGo. Nobody really that I want. Let's look at Tuesday. Lenore is Tuesday. Let's see where Lenore is. No. You can figure your own way out. I don't have to look at you. You can figure your own way out of this situation. I know you can. I love you. 4 hour. Let's look at Lenore on the 4 hour. I think it has you out, but the 65-minute, no, it has you in. No. Bank of America is back up above 29. Apple is up 2%. Google's up 1%. No. Moderna is up 4%. Moderna's flying. Why is Moderna flying? Microsoft's up 1.48. Pepsi's up 1%. Roblox up 3%. Snowflake up 4%. Oh, I just read Tesla. So the rumor is that Tesla... Come here. What? Oh, hold on. No. You can completely get under there. Man, the crying just drives me crazy. So I read that Tesla is lowering prices in order to compete, drive their competitors. They're lowering prices in China. That's going to hurt them. So you're seeing the stock kind of on a green candle. It opened at 167, low of 163, trading at 170 right now. I still think that this gap is in play. If we look at the 65-minute on Tesla, you're still down. You ain't close to the 8-day, so still out. I'd say stay out of it until it gets some confirmation. McDonald's. Let's look at McDonald's for Sherry. Mickey D's. Oh, why did I do that? Mickey D's. This is the 65-minute. You have a buy-in at 265. 265.02 on the 65. So it got you in. This one doesn't do great. Well, I shouldn't say it doesn't do great. Over 1,000 candles, which is 8 months. The algorithm makes you 12% in McDonald's, whereas you only make 3.76% in just the asset. That's over 8 months. So it does pretty well. It's just getting you out of a loss here. This candle, for some reason, it's at 1.79%, 65. I mean, that was the 9:30 candle. So this is the second candle. It just got you in. This one, it got you out, though. I mean, that 264 was a good price point. So I want to say 264 is probably a pretty good price point for this one, considering that's where it's kind of traded. I mean, obviously, the big one is back here. So, it's an interesting one. Again, 12%. Here, I'll share the link for you. I don't know that it does the results. Let me see. No, I guess it doesn't. It doesn't show the results. I'll show you the results. Oh, I guess I can't. Here, let's look at Berkshire B on the 65-minute algorithm. It just got you in and got you out. So it got you in at 306, a 1% loss out on this one. So you're still out. But I think I would probably buy at 303. I probably should buy it. Let's look at the 4-hour on this one. Where's the 4-hour have you in? So you'd be out, and there's a gap here between 291 and 294. And you're below. You're currently at 303, which is just below that. Yeah, and I love McDonald's. I mean, here's the thing. Your RSI is at 40, Sherry, on BRKB. This is the 4-hour algorithm, so it's a little bit slower. Your MACD's kind of crossing down. You're out of it, but I wouldn't... Shit. Am I thinking that, Berkshire's just a horrible... No. I think you're good in that one. Market's turning a little bit. I mean, it's floundering at 0. Cleveland Cliffs is back at 19. It's got a green candle. Its RSI is at 31. I may have just jumped the gun and bought at 20 instead of 19. But they just raised their prices again, so... Okay, I am going to go. I will talk to you guys tomorrow. Enjoy your day. It's 10:30. I'm out. Sun's out. It is currently 44 degrees here.